This is Robert Harper with Virginia Farm Bureau's Grain Division, bringing you the Merchandiser Minute for Friday, October the 11th, 2019. And what a week it's been of extremes. We've seen so much weather across the upper Midwest, across the northern plains. We really feel for those cattle producers and those row crop producers this week that are dealing with below freezing temperatures and a lot of moisture, frozen moisture and non-frozen moisture, and it's all had a big impact on price. Let's take a look at how the futures closed out the week in Chicago. December corn closed up 10 cents for the week at $3.97 a bushel. Your new crop soybean contract, November futures closed up 20 cents for the week in Chicago to close at $9.36 a bushel. And December wheat closed up 16 cents this week at $5.18 a bushel. When we look at those weather events this week, think about it like this. The weather that's been forecasted, and we've already experienced some of it in the upper corn belt, is unprecedented for this time of year, just like the planting season that we saw. And those producers out there, you know, they're having a difficult time as they're looking at trying to get this crop harvested. When we take a look at some USDA numbers this week, coming into the week, we saw corn harvest at 15% for the nation. Remember, the 5-year average this week is 33%. When we look at bean harvest this week, we came in at 14% harvested. The 5-year average for soybean harvest in the country this week is 31%. So we're also a long ways back on this late planted crop. Export loadings this week came in as expected for beans. China was on the top of that list. How good is that to see China there? Corn and wheat came in a bit below expectations on the weekly export loadings report. The sales report that we got on Thursday was very much above expectations for soybeans, and again, China was at the top of that list. Those bushels represent what was sold in the last week. Corn came in below expectation. Wheat came in as expected for sales. So again, on that corn number, remember, our corn is still the highest price in the world, and we've really felt that really for the last 4 months as our export numbers for corn have slowed down. Today, we just got the commitment of traders report. These are numbers effective of this past Tuesday. These are very important numbers to know. Remember, you need to know what the managed money speculators' opinion is on that board in Chicago. Wheat, 19,000 contracts short. Beans, 6,500 futures contracts long. And corn came in at 90,000 contracts short as of Tuesday. Now, the board has been up since then for corn, so we'll probably have a somewhat smaller short position. So keep your eye on that going into next week. When we think about trade this week, trade was in the news as much as the weather was. We started the week off with the United States and Japan signing a bilateral trade pact. This is going to include a lot of U.S. agricultural products, continuing that flow to one of our best importers of American products, Japan. That relationship looks like will continue and may even improve. I think one of the main things to see about this deal with Japan is once again the administration pushing for bilateral trade deals, us working with them one-on-one. So we got that done earlier in the week. We knew a very high-level Chinese trade team would be coming to Washington for trade talks Thursday and today, Friday. It looks like those talks ended today with much optimism. We did see that China indicated that they would be open and willing to do a partial deal. And they also extended an invitation to Robert Lighthizer, our chief negotiator, and our high-level trade team to travel to China next month for more face-to-face talks. So this is really good news, and part of those gains that we saw this week in the futures market are definitely related not only to the Japan deal, but also to the Chinese forward progress this week. We saw this week some interesting comments from the Russian Ag Ministry about the interest they have in forming basically a grain OPEC for the Black Sea countries. Keep your eye on that as we go forward. We also saw this week some pretty big Chinese purchases again. We've also mentioned that, and the way I read it, they made the single largest purchase of U.S. pork this week. So that's pretty positive, and again, just indicative of these trade talks moving forward. So we have to spend a few minutes talking about another big influence on your price this week, the October crop production report from the USDA. Very highly anticipated report. As you all know, the USDA adjusts acres. National Ag Statistics at this time, they get numbers from Farm Service Agency. I believe it's a type of merging they do between the numbers. So listen at this. Expected corn production, 168.4 bushels to the acre on 81.8 million acres harvested. That's a slight uptick in acres from 2018 on corn. Again, that's 168.4 bushels per acre expected for corn harvest. When we switch over to beans, the USDA is expecting 46.9 bushels per acre as the national average with 75.6 million acres harvested. Now the key on beans is that harvested acre number would be down about 14% from last year, 2018, so that's definitely supportive to price. Take a look at those numbers. There's a lot there in that October crop report. So next week, keep your eye on the Brexit situation. Remember, we like these bilateral deals straight on with other entities, other countries, and we still need to get a lot of work done trade-wise with the European Union and with the UK. Keep your eye on Brexit for next week. Watch the weather, stay safe in the field, and please give us a call if we can talk about local basis or helping you with any marketing needs. This is Robert with Virginia Farm Bureau's Grain Division.